what is it that you do that is going to be a significant value add to a farmer? And if you can't clearly articulate that, then I think that's a massive red flag.
1, 2, 3.
Coming up, we are talking about what the heck happened with Monarch. The Modern Acre is presented by Ambrook. We are super happy to be partnering with Ambrook this quarter to sponsor the podcast. Ambrook's mission is to build a more prosperous and resilient future for America's family-run businesses. They're starting with accounting tools to help businesses and farms manage finances, improve margins, and stay independent. We had the founder and CEO of Ambrook on last year to talk about starting Ambrook, where they're at. We'll link that in the show notes. We're super excited to partner with them this quarter.
All right, Ty, it's hard to believe we're already into Q2. It seems like a quarter of the year's already gone. It's crazy how time is flying. We're already into planting mode on the farm. We talked a little bit about it last episode, but actually have our first 2026 crops in the ground. So that feels good that we're officially off to the races.
It's wild. I can't believe it's here, the second quarter, and I feel like this year I just can't keep up. Is how I feel. First quarter's come and gone so fast, and just got to keep pushing, keep grinding.
Totally. Ty, excited to dig into today's topic, talking about Monarch tractor. We've obviously had Praveen and Mark on the podcast previously. A couple of years back, I followed them quite closely. We looked into getting a tractor on our farm, and the writing was kind of on the wall earlier this year. We talked about kind of the lawsuits that Monarch was dealing with earlier in the year, and the final shoe finally dropped this week, where they're officially shutting down operations, kind of effective immediately, which is kind of crazy.
Yeah, there was some recent reports put out talking about them officially, which there's been kind of rumblings and pieces by TechCrunch and everything, but everything kind of really solidified this week. Again, what everyone expected of them shutting down. And Tim, I think it's time to really unpack this a little bit. Like you mentioned, they were a darling ag tech company, right? I mean, they raised big money. They had great pedigree founders that knew agriculture from their roots at Motivo Engineering. It's funny how in the investment area is just momentum builds around one company in a particular segment. And they definitely got the money for the EV autonomy segment and big name investors and a lot of money, and it's gone to zero. And we've been doing this now long enough, Tim, to now we've experienced some of this where we've had founders on early in this podcast history, and now we're seeing some of them go out of business, and it's pretty wild to see. And I think a lot of people on LinkedIn are it's like the gotcha posts about what happened with Monarch, and I think it's always easy to kick a company while it's down. And I've been in a lot of startups, and I think that if you've been in a startup, Tim, you've been in ag tech startups, everyone's doing their best. Everyone's trying really hard to make something valuable, to make something successful, to improve things. Ultimately, I haven't been a part of a startup that's not trying to improve the world in some way, shape, or form. And I think that was the case with Monarch. I think they had really, ambitious, ultimately good intentions to try to bring innovation and improve farm profitability. And at the end of the day, sometimes there's just not a market there. And I think we need to unpack it, but also recognize there was a lot of really smart people working really hard to make something happen. And sometimes things fail regardless of that.
Yeah, a lot of armchair quarterbacks on LinkedIn of just EVs suck. The company was bound to fail. So yeah, I think there's something more here, Ty. Obviously really good pedigree founders that we've had the chance to interact with, a very competent team, and obviously significant fundraising. They raised almost $250 million from very sophisticated investors. So obviously there was an opportunity and business case to be made here. Unfortunately, it wasn't able to commercialize. And I think a lot of what was pitched with Monarch didn't ultimately become realized. And I think that was where kind of the linchpin that slowed things down with kind of the autonomy piece. I think that was a big challenging point where they had promised kind of, this autonomous tractor, which I think was like more of a feature. Like I think they over-indexed on kind of the autonomous piece versus just like being an EV platform and kind of starting there, where I don't think a lot of farmers like really cared that it was like driver optional. That was kind of like a value, like a later on feature. So I think that was like one of the sticking points.
I have like a slightly different take. I feel like they didn't have their one thing. They didn't have the one thing that made it like obvious, like why they were doing what they were doing. And this was always my struggle, was like, are you the EV tractor company? And if so, like, what is the differentiator? And this is, I think, a challenge in the market, right? Is like, why is an EV better on farm than a non-EV? Like, let's take the environmental benefits out of it, right? I think, and that's why we've talked about it. Tesla, Rivian, others have gained a lot of market traction because they have really good products,
Yeah.
right? And features. And it was unclear to me, what about it being an EV is better from an operational perspective than a non-EV or the other options on the market. So, and then they added in these like, the autonomy feature, which they were like playing in autonomy, that they, I think, struggled with. It was autonomous, then it was driver optional, and there was a lot of issues with that. And then there was all these like the sensor data piece, right? Is like, if you can have, there's cameras on board, and if it's collecting data at the farm level, maybe there's a value play there. They didn't nail any one of those really well. And it was kind of like, these are kind of little features, but none of them were like the needle mover that a grower needed to be like, this is why I'm doing this. And this is why ultimately, I think we have a great example with Nuss Farms. We had a pre-order in for a Monarch because we thought, hey, this is cool. We can get behind some of these features. But then when push came to shove and we needed to place an order, we were all, I mean, Tim and like me and you were looking at each other and we're like, well, why? Why would we buy this tractor? And I think we like went down the list. The fact that it was an EV was kind of like cool, but didn't really, there was no benefit. There was no value. And it was operationally, we got to figure out how to charge it. It's lower horsepower than what we really need. So the EV thing, that one piece didn't help us. The autonomous piece, we didn't really fully understand the capability, and that's like training up a new operator. And it just felt like the autonomous piece was probably interesting to us, but the lack of capability of the actual tractor to do the jobs that we needed it to do, there was a disconnect there, right? It wouldn't really be replacing jobs, the types of jobs we needed on our farm that require kind of bigger horsepower tractors and different bed configurations. And then the third one is the data sensor piece, which again, like wasn't enough for us to like, oh, this is going to be a game changer. This is going to be worth the investment. So it's like you go down the list and we were like, well, even with a subsidy, it was going to be heavily subsidized. We still didn't want to pull the trigger. And that, I think, and this was before all the news came out. This was what, Tim, like a year and a half ago.
Yeah.
And I think we were like, we didn't pull the trigger because there was not really that clear feature or differentiator or value add to us as a farmer, even with it being heavily subsidized. Like the writing was on the wall at that point to me.
Totally. Yeah. And like in Monarch's defense, like they're more of like a vineyard focused use case where like majority of the user base that they were targeting was like vineyard type use cases, where ours is more like row crop vegetables. We were trying to like come up with a new creative use case, and it was going to require us like modifying the tractor and like therefore like voiding the warranty. And so it just became like, this is just going to be like a hobby toy tractor versus like a tractor that we actually need, or something that we could rent for a couple months and return back at the end of the season. So it's very much like a nice to have versus need to have. And we've made a lot of bad decisions along the way. This one was probably a good decision that we decided to pass on it.
We've experimented with a number of different innovative things on the farm, and I'm glad we made the decision to pass, even though like I was like. And again, this is like hindsight's 2020, right? We all thought this was cool, that someone going big and being ambitious about disrupting agriculture, and like I thought it was cool. I like wanted to work at Monarch. I had like I just thought it was really cool, a cool team, a cool mission, but lacked I think you should be able to explain, and this is, I think, a lesson for ag tech right now, is like, what is it that you do that is going to be a significant value add to a farmer? And if you can't clearly articulate that, then I think that's a massive red flag.
Totally. And early on, like they had a lot of momentum. Like they had the partnership, I think, with Foxconn for their actual manufacturing. They had investment from, I believe it was CNH. So they had kind of like corporate interest in developing this platform where like every big tractor company has kind of the small compact tractor, that the space that Monarch was playing in. So like really interesting that like it didn't just turn into like an acqui-hire type situation, Ty, that it's actually like going out of business where like can't even like sell it for parts or do kind of like a, a very small acquisition that CNH, like they've obviously invested heavily. Like why wouldn't they just kind of take it over and maybe that's still to come. Like we saw the FarmWise news where like they went out of business, and then a couple weeks later it was like Taylor's buying them for pennies on the dollar. So we might see something similar here with Monarch.
I think that's very likely. I don't know if it'll be CNH, but I definitely agree that clearly they didn't want to invest more. And if they can just pick up some of the key IP and technology, then I think that's likely to happen at this point, similar to FarmWise. But I think this now just begs the question, Tim, we kind of broke it down. Why was this unsuccessful? And I think there's market pieces of it. I think there's a lot of factors that come into play here. But Jeanette Barnard recently put out a piece on her Substack asking the question that I think is a great question of, has any ag tech startup actually achieved product market fit? And I think it is like such a thought-provoking question. And Tim, like we did our long form podcast on the Climate Corporation, for example. And we've discussed doing other, ag tech startups in that kind of long form, dissecting some of these successful ag tech companies. There hasn't been a lot. There's been like successful ag tech exits, which there's still not a ton of those. Prospera, Blue River, Climate, but I think you could make the argument that those were not successful for the acquirer. Even Climate, who I think has made significant traction. I think it would be interesting to kind of like do a postmortem on what they paid for it and the value they've gained in return. And some of these other ones that the companies have literally written down, right? Some of these acquisitions. So there's been successful exits, but it's like for us, even profiling and digging into some of those companies, did they have product market fit? And then you have all these obviously like hundreds and hundreds of companies that have not achieved an exit. And I think it's just a really thought-provoking question of, we haven't really seen an ag tech startup successfully scale and achieve product market fit. And I think that's an accurate statement.
I think it's an accurate statement, especially like when you look at just kind of like across the U.S. adoption. Like I think there's certain ag tech companies that have been successful regionally, but there's nothing that's kind of like ubiquitous across like all crop types, all geographies. Like when you look at our farm, like what are kind of the pieces of software that we're buying year in and year out? Like it's probably a different subset of tools that a grower in Nebraska is using. So like to really hit scale and escape velocity and have that true product market fit. And TAM, these companies are promising investors few and far between. Like the big ones, it's like the big inputs companies or the big seed companies or the big OEMs. There's not like a ton of net new companies in that space that every farmer across the US is adopting.
Super good point. And I think that's like a fair qualifier. It's like intentionally controversial, this statement, right? Product market fit is depending on how you define it, right? And I think it is correlated to how much you raised. Does that make sense? Right? Like, I think if you raise conservatively and you're profitable and maybe you don't have national adoption, but you might have product market fit because it's like related to the expected outcome, right? Yeah. I think there's like, this is the thing to consider. And it's like some companies have raised way too much and never achieved that scale that the investors thought they were going to achieve. And so I think it's all relative to the amount that you've raised and what your strategy is. So there's, I think, companies that have maybe raised a little bit or bootstrapped and are successful and profitable. And I think, yeah, you could probably argue they do have product market fit. And it comes down to these companies that have raised too much. Their ambition or their investors' ambition was not in line with either the TAM or the overall strategy.
It makes sense. Yeah, like the bigger picture you can paint for investors, the more money you could theoretically raise, especially like in the environment that we came at during kind of peak ag tech. And the challenge there is like you can kind of buy yourself expansion when you have that big of a war chest to go into and expand into new markets before you like really even validate product market fit back home. Like I've seen this at prior companies I've worked for, where there's like the urge to like, we've got all this capital, we need to like prove that we're growing, we're scaling, like we need to get into new markets, versus like really locking in kind of your thesis and in one specific market. So I think a lot of companies kind of got stuck in that, where they like expanded too quickly because they had capital, because they wanted to prove to investors they could scale it, and it was probably the wrong decision.
I think agriculture is just so hard. I mean, I think you have these layers that don't exist in other markets, right? You have like the distribution layer and channel. You have the corporates, the major ag players, right? There's just these hurdles, and I think the biggest is distribution, and then I think the other one is just the diversity of agriculture, right? It is like hard to find a product that is ubiquitous across all geographies and crop types, and I think it's just really, really hard. And like give some examples. Like it's like tractors. Like
yeah, it's all like boring things that like aren't a sexy thing to fundraise for. It's like, what are our like, who has product market fit on us farms? It's like it's AIM, like the place that we get machinery fixed at. It's the two local like places that we're getting parts. It's the Napa Auto Parts, Belcorp Ag, these kind of like dealer adjacent groups that we work and get parts from. And then it's like, it's Nutrien, it's John Deere. It's like these big OEMs relationships that we have.
Totally. I think we've seen I think where there's been a bit of product market fit is in like the biological segment, right? I think like Pivot Bio, Sound Ag, some of these major startups that raised considerable money that are actually getting significant distribution and reach. I think that's a good example. And I think that's when that distribution happens, when that scale happens, that's when companies can be successful. Jury's out on the robotic space, right? And I think I think there will be product market fit for as the unit economics come down and become more favorable. But it seems like the technology is valuable. It just comes down to making the technology and the unit economics work for both the farmer and for the company.
Totally. Yeah, I think we've seen that like on the kind of robotic weeding side, the See and Spray technology is like it's getting quicker to build these models, but yeah, still trying to find an effective price point in a really challenging farm economy is still TBD. And I think a lot of these companies are in an interesting period where they've like, they're a couple of years removed from their last fundraising round. Like, how do they kind of get to the next level and kind of thread this needle? Like, I've seen it from companies that we've talked to the past couple of years, and like every year you're talking to kind of a new salesperson. So just kind of like interesting vibes for some of these companies on how they kind of persist and get to kind of the next phase of the company.
Tim, I'd like to end it with like, you have a really interesting perspective. You're a farmer. You've worked for VC-backed ag tech companies. We have, we saw up and close and personal what happened with Monarch. Like, say there's a founder listening to this podcast and they want to start an ag tech company. Like, what advice would you give them? Like, what would you tell them? Like, don't do it. Like, what would be your advice? How would you walk them through? Forget the idea. Just like, what would your advice be?
Yeah, it's kind of like cliche of like being farmer focused, of like being boots on the ground. Like, I think you really have to spend time in the field to like understand the actual needs of a farmer, and like you really have to like plant a flag, I think, in a geography or crop type and really like nail that before you expand. Like folks like Devin at Luma that we've talked to that like are hyper focused in a certain geography in a certain category and really kind of own and dominate that market. And I think a lot of companies try to be all things to all people and like just get pulled in different directions of like, oh, we could do this. And somebody asks about another product and they're just kind of like spread too thin versus being hyper focused. So I think focus is a really critical tool, and then really think about distribution, where a lot of times there's technology we'd like to add, but it's just kind of like challenging to piecemeal it together versus going through kind of the channel part, like channel distribution. I know a lot of people have thoughts about like the channel and how to crack the channel, if you will, Ty. But I think that's a really important aspect of this, especially like when we're talking about inputs and biologicals, like much easier for me to procure a biological through an existing buyer relationship that I already have versus setting up with a net new company and having to kind of buy one product when we're buying hundreds from another vendor. So I think that's a interesting component as well as like how you go to market. But yeah, being close to the farm early on makes a ton of sense, like really investing there and not spreading yourselves too thin early on.
I think what I would add is being really thoughtful about your fundraising strategy. What do you want this company to be? What money you need to get there? And even thinking about the exit strategy, right? I think too many companies have gone in and just being like, I'm going to disrupt agriculture. That was Monarch, right? I mean, I think like Monarch, FBN, Indigo, and of just like completely disrupting. And I think you need to think about like, what is the end goal? We have not seen successful IPOs in agriculture. I think it would be unrealistic to assume you will IPO. There has not been a ton of successful acquisitions. And so I would almost like reverse engineer what are the potential acquirers in a space? And how can I fill a gap? Or how can I become so valuable that they would be foolish not to want to acquire me, right? Like how can I make such a dent in their area that they have to take notice? And what is your partnership strategy? Like, are you going to partner with the channel? What's that going to look like? And I think let's look at Agtonomy. We've talked to Tim a few times. They've had, I think, a thoughtful approach. And I think they've raised moderately and conservatively every round. They had a bigger round recently, but nothing crazy. And they chose a very specific model where they're not going to compete with the big OEMs. They're going to partner with the OEMs, and they're going to be this technology layer. I think they've done the like crawl, walk, run really well, Tim, where they like started with like, I forget who their early partner was, OEM partner is, and then they kind of like build reps and about how they're going to work with the incumbents. And I think that's been really successful for them while delivering this value add layer in agriculture. So I think I would look at Agtonomy and kind of study what they've done and how they've gone about fundraising, about their business model, their go-to-market, and just be mindful of that. And if you're going to raise a ton of money, you've got to have that clear value proposition. Like I look at Ohalo. Their clear value proposition is we can genetically modify plants to have a step change outcome for growers, both in yield and in cost, whether it's how seed is produced and developed. And I think like that, being able to clearly articulate that is really important. And Ohalo's done that, and I think how Agtonomy has gone about fundraising. I would look at those are two companies that I would think about as you're thinking about the company.
Totally, and like the point about being more conservative in fundraising, I think you could do that now better than ever with the AI tools that are available, where like we just saw like last week, it was like the first one-person billion-dollar company, which was predicted by Sam Altman, I think 18 months or so ago. So I think just the tools that are available now for founders, you can kind of get to market a lot more cost effectively. And I think there's a lot of interesting companies like Danny, what he's doing with Reservoir Farms about really creating like on-farm incubators. So some of those pathways that are available for founders now that weren't in years prior, I think are all value adds.
What do you guys think? Curious your thoughts. Hopefully this was helpful. Tim, it's like a bummer to talk about Monarch. And again, hopefully the team there can find new roles and good opportunities. And hopefully there's not a complete exodus from agriculture, but some of them lean into ag. But I think a lot of lessons to learn. And it's something that I'm taking away as a CEO of a company in ag. And I think we can all take away and really hone how we think about growing businesses in the sector. But we need more founders, we need more entrepreneurs, we need more people doing this hard work in this space. But I hope you guys enjoyed the episode. Again, thank you to Ambrook, our sponsor for the quarter. Be sure to check them out, and we will be back next week with a fresh episode. Thanks, guys.